Good morning, everyone. We're just going to do a quick audio test. If you can hear me, please type yes into the chat box. All right, looking good. I can hear exclamation point. All right, everybody. Thank you for joining our summer CPE learning series. Not summer yet, but it's feeling it. Today's webinar program will be moderated by Brad Caruso and presented by Jonathan Weinberger and Teresa Richardson to discuss tax and other implications of remote work for nonprofits. Before we begin, I have a few housekeeping notes. Materials for today's presentation can be found in the toolbar located on the right of your screen. At the bottom of the toolbar, you will see a question box. All questions pertaining to the webinar content will be answered at the end or scattered in between, so please submit them there. We will do our best to address them. Please be sure to answer all of the polling questions to ensure that you receive CPE credits for today's session. Once the webinar is over, there will be a pop-up asking to complete a survey of today's webinar. Please take a moment to complete it. It's our way of being able to provide you with the best and most relevant programs possible. And with that, I'm going to turn it over to Brad.
Great, thank you, Ashley. Can you hear me? Everyone can. I see Jonathan and Teresa nodding. So Good afternoon, everybody. Good morning if you're on the West Coast or not on Eastern Standard Time. Good afternoon, because it just turned past noon if you're on Eastern Standard Time. Welcome to our webinar today. We're excited to provide you with both this learning series over these next couple Fridays, as well as to update you on some issues that are affecting many nonprofits right now, as well as that are affecting many businesses that are burning questions we're getting every day. So we're going to talk about some issues affecting not-for-profits with telecommuting, mobile employees, and also give you a little special treat with having my friend Teresa on the phone, as Teresa is Withum's Chief Talent Officer, to talk about what is Withum doing and what are some of the things that we're experiencing with mobile employees, remote working. As you know, we're a 1,200 person, many of you may know we're a 1,200 person firm, and so we're also experiencing, even though we're not a not-for-profit, we are experiencing much of the similar issues, questions, considerations, and we're obviously thinking about how we're going to reopen the offices and assimilate our employees back into the workforce the way that we used to. So with that, I just want to introduce Teresa and Jonathan. Teresa, maybe tell everyone a little bit about yourself.
Sure. Good afternoon, everyone, or good morning, everyone. I'm Teresa Richardson. Thank you, Brad, for the great introduction. Yes, I'm the firm's Chief Talent Officer. This was my first job out of school. I started on the accounting side, so I did both audit and tax. Came through the ranks, made it to partner about 10 years ago, and then 5 years ago, the firm asked me if I wanted to be the firm's first Chief Talent Officer, and basically what that means is I oversee the entire life cycle of all of our team members, all the way from recruiting to HR, learning development, coaching, inclusion and diversity, a little bit of everything. So I'm honored to be here, and I thank you for the introduction, Brad.
Awesome. Jonathan?
Yep. Hi, everyone. I'm Jonathan Weinberg, Senior Manager in the State and Local Tax Group. I've been working exclusively in state and local tax my entire career. So any issues that go multi-state, including employees going over state lines and traveling about, certainly has state and local tax implications. So excited to talk through some of those issues this afternoon.
Awesome. Thanks, Jonathan. Thanks, Teresa. So as you can tell, we have an interesting conversation today, and we're going to keep this more conversationally. We did provide slides, but I will throw you a curveball. We're probably not going to go over the slides too much. They were definitely a takeaway. I'm going to be spitballing some questions, and I didn't tell them this in advance. I'm going to be sending some wild questions at Teresa and Jonathan. And if you can send in through the chat message, if you have any burning questions, anything that we're talking about you want further clarification on, we certainly want this to be an interactive conversation about some of the state and local tax issues that many of you are experiencing from an employment perspective as well as things to think about with reopening and things like that. So certainly utilize that chat message. Also, if you're one of my clients or one of my contacts or friends, feel free to shoot me a text message. I'll be monitoring the live feed over here on my desk. And with that, we're gonna get rolling into this. First and foremost, with every presentation any of you ever heard me do, I start with a fire safety tip. So as we're going into Memorial Day weekend, I just want to remind everybody of something. I'm a volunteer firefighter outside of Withum, and so my civic duty is educating the public. So many of you are going to be grilling next week, Memorial Day weekend. Some of you will have the fortune of having time off. So if you have a grill and it's a propane grill and that grill catches on fire, what do? Well, hopefully it's not right up against the house or under one of the awnings of your house, because that might be bad. So first thing is make sure your grill's not close to your house. Don't cook hamburgers in your garage, even if it's raining outside. Use an umbrella over the grill if you're going to do that. And then, secondly, if you have propane, if you can safely access your propane and the grill's on fire, try to turn it off, because obviously the fire is fueled by the propane gas. And so if you shut the propane off, if you can safely, not without it exploding, then certainly you can stop that. So just be safe out there and be mindful. Secondly, if you're going to fight an electrical fire, let's say you have a toaster oven fire, the best way to do that is not pour water on electricity, because that could electrocute you. You shut the power off first before you fight that, and then you could always pour water on it or use a dry chemical extinguisher to put that out. That gets a little messy though. So anyway, stay safe out there, enjoy time with your family, and don't grill inside your house. And that's it for the day. So we're going to get rolling, and the way we're going to get rolling is through a polling question, because we want to get you education credits. So Ashley, you want to fire off our first polling question?
I'm ready to fire off the first one. All right, polling question number 1. When you return to the office, are you looking to work in the office every day, hybrid, fully remote, or not sure yet? And just make sure you answer all the polling questions, and this will ensure that you receive your CPE credit for the session today. All right, looks like the votes are rolling in. Just another few seconds, and then I'll close it out. All right, and I'm going to close it, and we'll see what everybody said. All right, can you see that, Brad?
Yes. No, I'm not surprised here. Not surprised. The hybrid seems to be the most popular return to work choice. Out of all the speaking engagements I do, that's definitely always the highest. So I thank you for that. So yeah, so I will tell you what, from our lens, what we're seeing, what we're doing, the same thing is the hybrid. We are still all remote, although technically our offices have never closed. We are looking to bring everybody back sometime after the 4th of July, but just like almost like a restaurant, like a soft opening. We're going to strongly encourage our team members to come back the week after 4th of July, and probably 2 to 3 days a week. Just strongly encouraging everyone to make their way back to the office, almost like reacclimating yourself, right? To see what it's like to drive back to the office again, maybe meet somebody for lunch and do that kind of stuff. And I can tell you, I was in the office about 2 weeks ago for the first time in a long time, and it felt really good. So, and we're going to probably do a little campaign around getting everybody back to the office as well. Make it fun to come back to the office again and win some prizes and stuff like that. And then the week after Labor Day, we're going to look to bring everybody back. We're going to do a required 2 to 3 days back in the office. So we know that we have to remain flexible, just like the rest of the world. If you don't remain flexible, our team members will go somewhere else where they can find that flexibility. So, and some of the things, and there's a slide up here, but and we'll talk to it a little bit, and then Brad, if you want to fire out any questions, by all means. But the benefits of returning to the office that we're finding is, you get to once again experience your own company culture again. There's a lot that's missing when you're not in the office, right? We get a lot of our culture through this here, right through the screen, and a lot of Zoom calls and learning how to cook things and everything. But to really fully experience our company culture, a lot of things do happen in the office. So that'd be one of the benefits. Another thing will be simply, and this is definitely for the folks that are just joining us out of school, learning to ask questions and getting your immediate answer. A lot of times our younger staff are at home, or inexperienced staff, I should say, are at home, and they have questions and they don't always get that immediate answer. They fire off a question and then they spin their wheels waiting an hour for their answer to come back. Whereas when you're in the office, you can simply tap someone on the shoulder and say, hey, can you help me with this? And that power of looking over someone's shoulder, I mean, you can't beat it. The next comment there is just conversations, right? Just being able to converse with somebody, have an adult conversation, and not actually have to book a calendar invite to talk to somebody, right? Just walk down the aisle and say hello to somebody. It's something not to be looked over. And again,
an intangible asset in accounting speak. It's an intangible asset, being able to walk and talk to someone in person. It's like, wow, yes. That's what it turned into.
Going to lunch, happy hours again, just being able to internally network yourself so that you can build your own internal relationships. It's so important, and just being able to go to a different office and whatnot. So there's a lot of power in that as well. And what they also have been saying in a lot of studies is that it's a lot easier to spur innovation when you're in an office and you can walk down, you can talk about, hey, this is what I'm experiencing, or this is the problem I'm seeing. I think we can fix it. And just, again, not having to worry about jumping on a call with 5 different people, the ability to just grab a few people and talk through something, you might be able to quickly innovate.
Right. And so so here's an interesting thing that comes up a lot that I'm curious about. So we have obviously gone significantly remotely. We've been fortunate. Some of our offices are open, but we've been mostly remote. Have any employees, I will say, taken advantage of, let's say moving to Hawaii or anything like that? Have we had any interesting circumstances like that?
Absolutely. In fact, Brad, one of my own team members, she's the head of our recruiting. She heads up all of our experience hire recruiting. She joined us literally 1 week before the pandemic hit. And the funny thing is that, when she was hired, she's like, do you think I could work, maybe a day or 2 from home? And I'm like, well, your team's going to be in the office. We should really be in the office. And then boom, the pandemic hit and we're all remote. And we all then learned, right, we can do this from home. And as the time went on, we all thought we were going to be back in the office, like maybe see you in 2 weeks. Then it was like, oh, see you after 4th of July. Oh, see you after Labor Day. And the the time to return to the office kept getting extended. And she reached out to me one day and she's like, do you care where I work from? And I said, absolutely not. And the job's getting done. That's all that matters to me. She goes, well, I'm going to move to Myrtle Beach for a few months. I said, enjoy. And then literally last month, she said, I think I'm going to move here permanently. I said, enjoy. And so she's still with us and it's working perfectly. You never know where she's at, because right here we're on Zoom or on Teams, whatever we take advantage of, and the job gets done. So yeah, and Brad, that's not the only case in our firm. There's a lot of other cases like that. So
yeah, and Jonathan, interestingly enough, Jonathan, I think you're in a satellite office of ours too that we found out in talking with you today, right? Aren't you in a random location?
I am in the only branch. I'm the only person in this branch location. I started off as a remote hire. That when I was hired, all the offices were still closed. So I'm sitting in the satellite office in Northern Virginia.
Oh, nice. There we go. So that's this is an interesting segue into kind of the technical topic. So Jonathan, throwing a curveball at you. So Teresa mentioned that we had an employee that was a New Jersey-based employee.
Yep.
Okay. And they moved to South Carolina, maybe? I think you said Myrtle Beach.
Yep.
So, and it sounds like the person was thinking temporary, but now thinking permanent. So, Jonathan, how do you unpack that, and how should we have thought about taxation considerations when something like that happens?
Right, and when you cross over and go from that temporary aspect, 2020 is behind us, and people moved around expecting it to be temporary and went to family homes, vacation homes. Figured that if they're going to be remote, they'd be close to a national park, whatever it is that they wanted. But if the expectation is that they're coming back, that, there's only so much you can do around that. But if they have gone there permanently, I would say Withum now has a nexus in South Carolina. It needs to be registered for South Carolina payroll taxes, South Carolina employment taxes. That to the extent that the firm has South Carolina clients, we'll be a South Carolina taxpayer that will be subject to South Carolina use tax on our purchases. all those issues come into play when someone has relocated to a new state on a permanent basis.
Yeah, interesting. And so, certainly something to think about. And from your perspective, has there been any, like, as a result of the pandemic, how have the states pivoted to this concept? Has there been a lot of like change in how you consider it, or is it the same rules have always applied? We're just dealing with a new scenario. What have you been seeing on that front, Jonathan?
Yeah, these rules have always been there, but I'd say that states are sensitive to the fact that people had to move around temporarily as a result of COVID. And to the extent that people were in a state on a temporary basis, they were there for a couple months, or that again, they're there, but then they're moving back to where they started off. They're not really clamping down on that. But of course, if those moves become permanent, well, then all the old rules absolutely apply. And when you have an employee who's in a state, you're subject to all the requirements of an employer in that state. So I think we're going to see a lot of businesses and not-for-profits have to get squared away with regards to those temporary moves that ultimately did become permanent, and getting that fixed up.
Agreed. And so, for anyone's knowledge and benefit, as Jonathan mentioned earlier on, he works in our SALT group, not to be confused with the Pepper group, but he's in the state and local tax group. And so, they're dealing with these questions on a daily basis. And for the last year and a half have probably been nonstop phone or Microsoft Teams little jingle ringing all the time. Jonathan, what are some of the burning questions that you've been getting, and maybe share some of the advice that you've seen as far as some of the technical issues you've come across in the last year on this topic? Maybe a few examples you've come across that are common questions and common answers that come up with it.
Right. I mean, I'd say a big one, just because of the firm's location, is around New York's Office of Convenience rule. There are states out there that have what we call an Office of Convenience rule. And those states say that if an employee is working remotely for their own convenience rather than the employer's necessity, that they remain subject to tax, New York tax, on their wages. Massachusetts has a similar rule. Connecticut has a similar rule. There's 3 other states that have similar rules. So you wind up in situations where New York has said, as a result of COVID, if you're working remotely as a result of COVID, that's for the employee's convenience, not the employer's necessity. Even if the employer said, don't come into the office, that we're not an essential business and that the offices are closed. So you have employees that have gone off that remain subject to tax in New York, but that doesn't mean that they're not subject to tax in North Carolina, where they've been riding out COVID, or subject to tax in Vermont, where they've ridden out COVID. So you wind up in situations where employees might be subject to double taxation. You wind up in situations where someone says, well, I'm going to remotely relocate to X on a permanent basis, and I'll come to New York when I need to, 10, 15, 20 days a year, whatever it is. I'll do it on my own nickel because I'm working. You're nice enough to let me work remote. It's not a business need to have me work remote. And the employer has to tell that employee, well, sorry, but you're still subject to New York tax on 100% of your income, even though, and maybe subject to tax on 100% of your income in another state. So those have been some interesting conversations that we've been having with clients.
Yeah, no doubt. And so with respect to just to cover it again, because I think this was a common one. So if I was a New York resident, let's say my not-for-profit is in New York, and my employee then moves to New Jersey, so they're no longer in New York, they now live in New Jersey because they moved and they did it permanently, they still are considered for New York state withholding and everything, they're still considered a New York state resident employee based on this rule?
They would be considered a New York state resident. So non-wage income, so any personal income, they would be subject to New York tax on that. But on their wages, on their paycheck, anything that they receive on their W-2 would remain New York source, because New York is going to say, just because you move to New Jersey for your own convenience, not your employer's need. Now, again, there are real business trips, and as things open up, people will have business travel again. I mean, I've always had, gone to exotic places like Chicago in February, And I wasn't going to Chicago in February because I wanted to be in Chicago in February. I was going there because I was told to go there. So that's what my employers need. And so I would say that that's not an office of convenience day. The wages I earned while I was traveling to Illinois was for my employer's necessity, not my convenience. But again, if I'm now living in New Jersey and working from my home in New Jersey for my own convenience, those days remain subject to New York taxes if I had earned those wages in New York.
It sounds like this could get really complicated really quick.
Yeah, and there is another moving part, that there is a Supreme Court case or a Supreme Court challenge out there right now, New Hampshire versus Massachusetts, where Massachusetts instituted a similar rule to New York's, and New Hampshire sued Massachusetts and said, you can't do that. You can't subject New Hampshire residents to Massachusetts tax for the days that they're working in New Hampshire. We're waiting for the Solicitor General to weigh in. The Supreme's asked the Solicitor General for her opinion on whether they should take the case. Once we get that back, if the Supremes decide to take the case, I expect we'll have a decision at some point in 2022.
Plot thickens.
Mhm.
So let's take a pause there, because I want to cover a few other technical topics, but also want to just get polling questions in the right way, and maybe we could talk about the polling question too. I appreciate that, Jonathan and Teresa, sharing some of that information. Ashley, you want to fire up polling question number 2 for everyone?
Yeah, all right. Polling question number 2. How are you hiring talent? Only talent that is local to the office, talent that is remote. We will hire anyone regardless of where they live, or we have employees living the van life.
Living the van life. I didn't know what that meant, but Jonathan had to explain it to us. He'll explain it a little further what that means.
Yeah.
And what you got to consider, and what you have to consider if any of your employees want to live the van life, because there's some serious things to think about there.
Mm-hmm.
All right. We'll close it out in just a few seconds. Get those votes in. And we're going to close it up. Okay, results are in.
You're hired regardless. Yep, that's usually the winner as well. Oh, we have 2% living the van life. I don't know, Jonathan, you want to talk about the van life?
Yeah, again, as I'm having these conversations about what employers need to think about when they're dealing with remote employees, again, the first question is, are these employees going to be remote temporarily, or are they going to be remote permanently? And, you have extremes where I've had employers say that, okay, we're going to pick a date, and on that date, we expect every employee to be back at their desk in the office 9 to 5, Monday through Friday. And if they're not there, we're going to have a conversation about their tenure with the firm. I've had other employers say, we love working remotely so much, we gave up all of our office, and everyone is just now required to work remotely. And one of those employers said, in fact, we even hired someone that they bought a Dodge Sprinter van, a cargo van, they fitted it out with a kitchen and a bed and a bathroom, and they're just traveling around the country. They have a Wi-Fi hotspot, and they're going to all the national parks and the state parks, and every week they pick up and they go someplace else where they feel like working at it. And so, which creates interesting problems, because they might have to deal with withholding in 49 states. Can't drive the van to Hawaii, but they could drive it to Alaska. They might have to deal with getting registered and figuring out their unemployment insurance on this individual, where these people, where are they domiciled, where are they residents, all those issues. And of course, they had sales tax nexus in all 50 states anyway. So having these people traveling around doesn't change that. But if they didn't, having employees traveling around like that would create an obligation for them to collect and remit sales and use tax in all 50 states, every state that these people travel. So it certainly creates issues when you have employees to decide that they're going to be fully mobile.
Yeah, there's no free spirit exception, I guess, which
No.
there should be. Yeah, maybe there was in the 70s, but not in 2021. Yeah, so interesting, and so here's a common thing that I get as a question, and just thinking about the state registration side of things, and the most common question I get is, when do I need to register in a state? And so my immediate follow-up is, which registration are you referring to? Maybe Jonathan, if you, oh, bless you.
Yep.
Maybe you just spend a minute, because I think when our clients are thinking about this, one of the things that I want them to think about is there's more than one state registration to think, especially as a not-for-profit, because then you can get exemptions for certain things. And I think there's a lot to unpack there, but maybe if you spend a couple minutes just talking about what are the different registrations that people need to think about, and maybe what triggers one or the other.
Right. So really the first set of registrations are what I would call business registrations, and those are really to deal with trust type taxes. So payroll taxes. The payroll tax isn't the employer's tax; it's the employee's tax. Sales and use tax. That's not the vendor's tax. That's the buyer's tax. The vendor is just collecting and remitting. So once you have a presence in those states and you have an obligation to deal with those taxes, you need to register. So when you have an employee permanently in that state, you definitely need to register for payroll taxes in that state. And of course, having an employee in the state creates nexus for sales tax. So not-for-profit entities not subject to income taxes, but many of them make sales. I mean, the coffee mug, the shirt, the tote bag, whatever it is. And if you're selling tangible personal property, just because you're a tax-exempt organization, that doesn't let you off the hook for the obligation to collect and remit sales tax on taxable sales. So having that employee go into the state, maybe your sales into the state weren't enough to trigger nexus under the Wayfair thresholds for economic nexus. But once you have an employee in the state, you're on the hook for sales taxes in the state. But then on top of it, some states have additional registrations for not-for-profit entities. And again, that's a state-by-state consideration. Some states you only have the additional registrations if you are soliciting donations in the state, but other states, they're going to make you register if you have presence in the state no matter what. And those registrations might be an additional registration with the Secretary of State, might be with the Attorney General's office, and plus there might be additional registrations for exemptions from sales tax and exemptions from property taxes that you need to register for as well. So once you have that permanent employee in the state, you have a whole exercise in figuring out all the things that you need to register for in that state.
A lot to deal with. So if I were a New Jersey-based not-for-profit and I had an employee then move to Texas, an employee move to Wyoming, and an employee move to Pennsylvania, what would be my first move if I were you? What would be my first move in like analyzing this scenario? What am I looking for? What am I looking at? Right. And then what do we do? And then who do I call? Right. Other than you.
Well, just call me. That's easy. Just pick up the phone, call me. And it really is. We would have to look at each state and look at the activities of that employer, because you really have to register for unemployment insurance in Wyoming and Texas. There's no payroll taxes in those states because neither has an individual income tax. You would have to register for payroll taxes in Pennsylvania. Have to look at, again, are you making any sort of taxable sales? So again, the t-shirts, the coffee mugs, some not-for-profit entities have substantial sales of tangible personal property. If you look at colleges and universities and the bookstores, they sell lots of stuff, and they need to make sure that they're registered to collect and remit the sales tax in all the states where they have employees. So there's all those. I did mention other applicable taxes. I mean, states have all kinds of funny taxes. I mean, it could be around alcohol or all kinds of things. So again, if you need to register for those, you need to analyze the activities of the organization and make sure that you're registered for those items. It doesn't come up often for not-for-profits, but it has, especially with trade associations. And then, of course, you need to research what other things is the state going to make you register for as a not-for-profit. The Texas definitely has registration requirements for not-for-profits, even if they're not soliciting donations in the state. Offhand, I don't know if Wyoming or Pennsylvania do, but again, you need to look at each state on a state-by-state basis, and analyze those requirements.
Sorry, my my audio is cut. So every time my fire alarm rings, we have a radio. It actually cuts off my audio on the headset. So I apologize. I paused it. I was like furiously trying to like shut it off so it doesn't. I don't have to go run out. I was looking to make sure my neighbor's house wasn't on fire or something, because then I probably would have just failed and said, "See ya, I gotta go." That's how it works. How it works. So Teresa, from a Withum perspective,
Yep.
how are we thinking? Is there a way we're thinking about as well on the hiring front, like differentiating remote employees from in-person employees? Or is that been a discussion that has come up? It's a question I get a lot from clients as far as like, should we be thinking about their pay depending on where they live, things like that? Has that discussion come up, and what have you thought about it or heard about it as far as that concept? It's been a common thing I get as a question.
Yeah, and it is a common question out there as well. I speak with the top 25 firms as well and what they're seeing. And currently, I can tell you from Withum's lens, we have not changed our pay scale dramatically on anyone that is chosen to move. We haven't changed anyone's pay scale at all, to be honest. So somebody started with us, let's say in New Jersey, and they've moved remote to a different, we have not changed their pay salary at all. From a hiring perspective, if somebody is hired in a state that, is, and they're going to be fully remote, we might think about what their salary looks like. We haven't really adjusted though anyone, to be honest. We're keeping everybody the same. And what's happening though in those remote states, as I'll hear from other accounting firms, well, you're buying our talent at rates that you're paying for the East Coast or the West Coast, and you're giving our people higher pay. But that is the common thing across what we're hearing across all accounting firms. Clients out there, and clients as well, are saying the same thing. So, but I will tell you, from a hiring perspective, it's really opened up the channels for us and for all of our clients as well. Being able to work remote, the amount of talent that's out there across the entire United States is unbelievable. So it's widened the net for us to capture more talent. And what it also allowed us to do is we attract a lot of college students annually out of college. We hire on average about 120 students out of college. And what that's allowed us to do is we have what's called Tour Day Withum, where we have leadership days, and we used to be in person when we were in person. Now we do them virtual. But it's allowed us to get the message out there more so out to the other states, out to the other colleges, more diverse campuses, so that we can attract more talent. So it's really widened, again, the pool, not only from an experienced hire perspective, but from a campus hiring as well.
Yeah, that's awesome. And I think it's great for, everyone on the phone today, not-for-profits, thinking about it. Obviously we're coming at this from two angles. If you're going to start thinking about these strategic things, you also have to think about the compliance things. We want to make sure our clients think about both, right? Think about strategic. What's going to make you run your business better? Think about compliance. Once I do that, now I trigger some other things that I now need to deal with. And compliance, I usually say you have to deal with, because not many people love compliance. But at the same token, you also don't love when one of these regulating states comes knocking on your door saying, "Here's my questionnaire of why you're in my state and why you didn't tell me before."
Yeah.
Or
So
Jonathan probably sees more of that, but I think that's what I've seen before.
It's good from my end, right, to attract the talent, but then it goes right to Jonathan and his team, because now they got to deal with it. So it does. It's a rolling stone effect, doing one thing and it just rolls into something else.
Yeah, no doubt. So with that, let's roll into polling question number 3. Ashley, if you want to fire that up.
All right, polling question 3. How often does your organization analyze the states it needs to be registered in? Annually, we receive information. There is an employee in a new state. If there is an employee in a new state, when we receive notices from states, or never.
Option C, when someone externally asks me to think about it.
All right, just a few seconds and then I will be closing it out. Make sure to get the votes in. There's just one more polling question after this one. And I'm going to close it out. All right.
So yeah, that's the never was a little bit higher than what I expected. You know, that could be one of those things where that surprise notice that can be a real thing to address. And when those notices come up, they get expensive quickly. So I would say as a best practice, organizations probably do want to check their need to register in additional states from periodically. I mean, if you're a very large organization, you're already registered in all 50 states, well, you know, then there's nothing to really check. But I would say every year you want to just kind of go through and ask people to raise their hands, ask people if they did move, ask people, you know, again, how we hired new people, where are they? Because again, once those state tax notices start coming in, the cost to address them can get significant quickly.
Very quickly.
Yes.
Very quickly. So I guess similarly on this topic, and most of these slides are takeaways. There's a lot of information on them, but the one thing I wanted to revisit, Jonathan, a little bit is the concept of employee income tax withholding, because you know, I think one of the issues I run across a lot just in the practitioner world that I live in on the audit side, because generally speaking, you have state registration things that are happening, which are sometimes legal in nature, sometimes not legal in nature. Then you have your payroll company, which is actually physically you know, generally speaking, most organizations are utilizing a payroll company, third-party payroll company to handle these filings. How do you marry those two things together? And how do you make sure that my employees, as you said, like on the W-2 or, you know, that the wage is allocated to the right state? Is there a way to check that, or is there a way to, how do you go about analyzing that from a perspective of my employee just moved to 2 states? Like, how do I know that I've communicated to ADP right? How do I work with my payroll company? What do you see on that front, and how do you usually deal with that, or how do you usually handle those questions when they come up?
Right. You know, payroll companies are used to dealing with this. I mean, you know, that's the whole reason why they exist, is to handle, you know, the state remittance of taxes in the different states. So informing a payroll company that, okay, I now have an employee in a new state, and they're permanently there, so let's get them set up for Georgia or South Carolina, that's usually not a problem for a company like ADP. A lot of the problem comes in when you do have employees with significant travel. I realize in a world of COVID, there's not much travel going on right now, but you know, that states, when you have employees traveling into a state on a regular basis, that state wants their tax too. That when I lived in New York, I would regularly file 5 or 6 state tax returns a year. You know, I'd obviously have to file my New York return, but I'd wind up filing New Jersey, Connecticut, Pennsylvania, Illinois, you know, just based off of business trips that I took to those states. So tracking that employee travel for a business or an organization that doesn't really charge by the hour can be difficult. And you know, it might be worth looking at processes to make employees do that through the T&E process. When people are submitting their receipts for reimbursement for T&E, that they also need to be submitting information on where they worked and where they were traveling, so that we can get the payroll taxes right on them as well.
And what does a typical like registration look like? Like if I'm gonna, you know, when we're talking about generically a little bit, I'm gonna register in Hawaii because I just had an employee decide to go live in paradise. What is entailed in that quote unquote registration process? Like what do you have to think about when you're filling out the registrations? What do you not want to tell this, you know, what do you not want to kind of divulge because you're opening yourself up? What are some things that you see in that registration process itself?
Right. You know, the forms to do a registration are usually pretty simple. A lot of them are just one-pagers where you give the state a bunch of identifying information, you know, name, FEIN, basic address, basic stuff, And then there's some check boxes. You know, I need to register for payroll tax. I need to register for sales tax. And you just check off the ones that are applicable. And most of them are even online, and you just click, 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 and then you're done. The issues that I've run into around information are, you know, most states will require you to provide responsible party information, where if a tax for whatever reason isn't paid, the state wants to know who they can go after with personal liability. And of course, no one wants to have that liability. So, you know, the question, who's going to be it? So questions around that. And the other is that most states will ask you, well, when did you start doing business? When did you start having obligations for these taxes in the state? And if it was, you know, this week, and you know, they started on May 1st, and I'm getting this form in on May 21st, it's not a big deal. You know, you get caught up around some payroll taxes for a couple weeks, and okay, life moves on. But when you start looking at it and say, oh, gee, we've had someone there for 3 years, you know, oh my God, we've been there the whole time. That can be a really difficult conversation to have with the state, because now they know you're behind. And of course, all these forms are signed under penalties of perjury. So, they don't like you to leave the answer to that blank, and you can't give an answer that's intentionally incorrect. So again, there can be some heartache around, well, how do we really respond to that question on the floor?
I think often, yeah. I mean, what do you know? And it's obviously a case by case scenario of how you handle that, and there's risk tolerance and all things considered. But I mean, it's a difficult spot to be in, and I'm sure a lot of employers right now are kind of getting into this. Now,
Yeah.
Assuming that I'm an employer and I had somebody move, because I've heard this a lot. Like I've had to go take care of a family member who's fallen ill. I've moved to state X, but then I moved back 6 months later. You kind of talked about this before, but just to reiterate, because I know it's a common thing that happens, especially now. How should they be thinking about this when that happens?
Yeah, with the temporary moves, I mean, that again, most states have said that if someone has just come into the state temporarily, we're not gonna clamp down on the employer. That it's just not practical for anybody. And I think states realize that, you know, that you didn't ask someone to go to state X on a temporary basis, regardless of what the reason was. I mean, it could have been they went to South Carolina because they wanted to live by the beach, or they could have gone to South Carolina to take care of a sick relative. Either way, right. It doesn't really
same scenario.
Matter. Yeah,
same scenario.
So, you know, those temporary moves, states, not to say that there couldn't be issues, but most states are really not going to clamp down on employers around that. But again, it's what happens when you go from that temporary to, you know, someone went to South Carolina to, you know, help out a sick relative, and all of a sudden they're like, well, you know, I really love living in Charleston, you know, and being close to the beach and Kiowa and all the history and great restaurants and everything else. So, you know, that creeping shift can always come back and trigger things as well, because again, how do you answer that question? Well, someone went down to South Carolina to help out a parent last June, and they were always intending to come back until this past February, and they said, well, you know, I like Charleston, so I think I'm going to stay permanently. Well, how do you answer that question now on the form? How long have you been conducting activities in the state? Well, when you started, it was that temporary intention where you know, employers weren't really worried about it, but now it's gone permanent. And, you know, do you have to say, well, you know, we've had this issue going all the way back to last year because, you know, we had that intended to be temporary presence that is now switched over to a permanent one.
Yeah. How do you answer that form, right? It's like, well, the person technically has been there for 18 months, but I thought they were coming home.
Yeah.
Thought they were coming back to the Garden State.
Yeah.
Awesome. All right, so let's jump into polling question number 4 here. Make sure everybody gets that in there. We'll fire this up, talk about it for a little bit, and then have some closing thoughts. If you have any questions, post them in the chat. Ashley, I didn't see any chat questions yet, but if you've seen them, maybe you can read them off and we can talk through them. I haven't seen any though.
Well, We have quite a few. So if we don't get to them, we will definitely follow up with all of you. I see a lot of comments that have come through. But this is the last polling. I'm not sure. But this is the last polling question, so just make sure you get your answers in for this one. When it comes to payroll taxes, my organization is compliant in every state where we have a payroll tax obligation, the states where there are offices, the state where the headquarters is located, or nowhere.
Nowhere.
I'm thinking if it's nowhere, Jonathan's getting a call today.
That or it's one of the, Marvel Avengers that lives in the foreign district of nowhere.
Mhm.
Any Avengers fans out there?
All right. We're just going to close it up in a few seconds. Get your last minute votes in. All right, closing it up.
Nice.
Okay.
So someone is at nowhere.
It's that same 2% that are living the van life.
That's right.
Free spirit exception. Coming back. Awesome. All right, Ashley. So for some reason, I don't see any questions coming through. So I apologize. I was supposed to be monitoring these, and for some reason, I don't see them anywhere. Do you want to? Why don't we just go into Q&A? I think it's a great time to kind of fire off some questions. So Ashley, maybe if you want to read them off, and we'll go one by one. We have a couple minutes left. We have 5 or 10 minutes left, so it's great.
All right, we'll start from the most recent. So Scott asked, how do you deal with the start date if the situation changes from temporary to permanent? I imagine this happens post-COVID.
How do you change from a start date? Is that what that was? Oh, are you talking from a tax perspective?
From a registration, what do you put as the start date? You put the date they moved there, or do you put the date that they became permanent? I think that's the question.
I think that's one where you need to make a decision because, you really did start when they went there temporarily. I mean, if they say, when did you start having payroll in the state? Well, we really did start back when it was temporary. But I think that is the most correct answer. And that will certainly, might generate some interest from the state. But I think that's something that states will accept an explanation of, where if they did come to you and say, well, how come you didn't get right with the state right away? I think you can easily explain to say, well, this is someone who moved there temporarily because of COVID. And it was always intended to be temporary. It was initially intended to be temporary, and then it converted over to permanent. So I think they would accept that explanation. I do think the more correct answer is, again, to put the initial date the employee went down there, though.
All right. The next one is, yep, go ahead, Ben.
I was going to say under penalty of perjury. Go ahead, Ashley.
All right. The next one is, what is exactly meant by where the employee activities create nexus for the business?
Right. So nexus is the constitutional requirement for the minimum contacts for a state to impose a tax on an entity. So the definition of what constitutes nexus has changed over the years. But one thing is constant, in that having physical presence in the state is definitely a nexus creating activity. So having an employee in the state absolutely creates nexus for employment taxes. It creates nexus for sales taxes. In the for-profit world, it creates nexus for income taxes. And I will throw out one point, is that some states' exemption from income taxes for not-for-profit entities is more restrictive than what's given in the Internal Revenue Code. So while 501c3s are exempt from income taxes, other than for UBIT, not every other tax-exempt organization is exempt from state income tax. So some states might tax a 501c6 or other entities that are chartered under IRC 501c, but not C3. So, that once you have employees in those states, you need to deal with all those state tax issues, because again, you have now crossed the threshold of having the minimum contacts necessary for a state to impose a tax against that entity.
All right. Next question is, what if you use a PEO, professional employee organization, for payroll? If the PEO is registered in a state where an employee moves to, does the organization still have to register?
Right. No, if it's a PEO, so with a PEO, they really would take care of the registrations because they're the legal employer. So, but again, it might take care of the registration when it comes to payroll taxes.
Withholding.
Yeah, with withholding, but it doesn't necessarily take care of the registration. Well, you still do have someone in the state acting on your behalf. So if you need to get right with regards to sales taxes, again, the states that don't necessarily exempt your type of exempt organization from income taxes, to the extent that you might have UBIT now derived from sources in the state, you need to still get right with all those things. So the PEO would certainly take care of all the payroll and withholding obligations as part of their registration. But again, that with regards to other taxes, having that employee would still create the issue for you there.
That was a good question.
Well, that's a good question. All right, the next question is, our company is in New York City. A few staffs live in New Jersey. Should we register us in New Jersey for payroll taxes?
And again, I think the question is, are those staff people who've been working remotely in New Jersey, are they going to be working remotely from New Jersey on a permanent basis, or are they going to be expected to come back and commute to New York City once COVID is over? If they are going to be permanent work from home, then I think New Jersey registration might be necessary. But again, those are individuals who might also get caught up in New York's Office of Convenience rule if they're deemed to be working remotely from New Jersey for their own convenience and not the company's necessity. So they might have to be withheld on, continue to be withheld on in New York State. New Jersey, at least for the time being, has said that they will give a credit for taxes paid to New York under the Office of Convenience rule, because they're afraid if they don't, everyone will pick up and leave New Jersey. But I don't think that's tenable for them to continue to give that credit for taxes paid to New York under the Office of Convenience rule. So I expect that they will rescind that guidance at some point in the future.
Okay. All right, we have a few more. So this next question is, does having one employee in another state automatically give you corporate tax nexus? Or does it depend on the activities of that employee? Assume there is no revenue from the state in question.
Right. So yes, I would say having an employee in the state certainly creates nexus for corporate taxes or for income taxes as well as sales taxes. In the for-profit realm, there is an exception called Public Law 86272 that says an employee whose sole presence in the state is for the solicitation of sale of tangible personal property where the order is accepted and fulfilled from outside the state, then the state can't impose a net income-based tax against that entity. So again, in the for-profit world, there could be some exception to income taxes for having an employee in the state when they're there to generate sales of tangible property. But otherwise, once you have an employee in a state, you're on the hook for all the taxes. And again, 86272 only prohibits the state from imposing a net income tax. It doesn't prohibit minimum taxes, sales taxes, franchise taxes, employment taxes, everything else. So once you have an employee in the state, you're really on the hook for everything unless you can fit within that very limited exception.
All right. We have about 4 or 5 left. This is good. A bunch of questions coming in. In those double taxation situations in which state employers have to pay unemployment tax, in those double taxation situation in which state employer have to pay unemployment taxes for those employees.
Right. So unemployment taxes have their own rules for sourcing. So the unemployment insurance, the first place you look to is where if an employee is localized in a certain location? Are they assigned to work from a permanent work location? So that's the first step, and then you can go through a whole slew of cascades, ultimately going to where the employee lives. Because you have to be on unemployment insurance someplace, and if you can't get to an answer anywhere else, well, then it's just going to be their home state. Again, with employees that have moved away or gone off on a permanent basis, I think you do need to reanalyze where employees are localized. And then if they're not localized in one place, and maybe it's where they're managed and controlled from, which might be the office that they started off in. Again, it's one other thing that needs to be considered when employees are saying, okay, I'm going to go move. Again, if it's a temporary move, they remain localized where they started off. But again, if it's a permanent move, then you need to sort something out. Like again, my client who has the employees living the van life, those employees are probably localized where they're domiciled. Whatever state that they were domiciled in before they got in the van and started traveling around the country, that's where they should probably be for unemployment insurance.
What about the reverse? This person says, when a New Jersey not-for-profit has an employee who moves to New York for COVID, what state tax applies?
That's usually the opposite of what I've seen. I mean, it's everyone moving from New York to New Jersey. I haven't seen many people going from New Jersey to New York.
I see a lot of New York license plates in my neighborhood when there's houses up for sale. So I think a lot of the traffic is moving from apartment in New York to suburban house New Jersey. But
Right.
I'm sure it goes the other way. New York prices are probably coming down, so now might be a good time to buy in New York. You never know.
Yeah. So yeah, I mean that again, that employee is now subject to New York tax on all of their income if they move to New York on a permanent basis. Now, again, is that person working remotely from New York on a temporary basis, or are they going to be working from New York on a permanent basis? You might need to start looking at, well, do we stop withholding New Jersey tax on that employee and start withholding New York taxes on that employee? And New Jersey does not have an office of convenience rule. So New York would probably say, well, all those days are New York days because you're physically in New York. That's certainly New York's position. And New Jersey would probably agree with that. But that's one of those specific questions that maybe we have a follow-up on, that answering, questions of specific scenario can be difficult without really going through all the details and all the analysis.
All right. So this was in regards to the South Carolina example. So with regards to the new Withum, South Carolina employee, would Withum qualify to do business in South Carolina as well as setting up to remit South Carolina payroll taxes?
Teresa, do you want to take that one?
Sure. So I would think, I mean, I'm no tax expert anymore, but I would think, yes, we are going to be subject as a firm to South Carolina payroll tax, which would then qualify us to file corporate tax. Did I get that right, Jonathan?
Yep. The Withum is an S corp, so the owners would all get South Carolina K1s. Now, since Nicole is not she's not generating income, since she's in recruiting, she's not serving South Carolina clients, things like that. We might have an obligation to file South Carolina income tax returns, but there might not be any South Carolina income tax due. Right. Because we don't have any South Carolina clients, we don't have any income derived from South Carolina sources.
Yep.
So, but of course, we still have an obligation to file and establish that there's nothing due. Just because you don't have anything due doesn't mean that you don't have an obligation to file.
Oh, good point.
Yep.
All right, so that actually summed it up. We have answered all of the questions that have come in.
Excellent.
All right, awesome. And we had perfect timing. It's 12:58. We have you till 1. We appreciate everybody's time, spending the time with us. Jonathan and Teresa, I thank you so much for spending your expertise and sharing your knowledge with our audience here. Certainly your knowledge is coming from 2 different angles, but also answering a lot of the questions at the same time. So I think it was phenomenal to have you on, have you share that knowledge and share some personal stories. We really appreciate it.
Thanks for having us.
My pleasure.
Yeah, thanks everybody. All right. So we are going we are going to wrap it up for today. Just be sure to answer the survey that pops up when we close out the webinar, and everybody continue staying safe. Have a great weekend.
Have a
Check out
great
Civic
weekend,
Warriors
everyone.
podcast.
Yes,
Bye.
check out our
Bye, everybody.
podcast, Civic Warriors.
Bye, everybody.
Take care.